Our perception of money is changing rapidly, and banks are at the center of all of it. From how we access it, to how we buy, to how we trust that that money will be there when we need it. I'm Kiah Haslett, the creator of FinTech Takes Banking. Here on Bank Nerd Corner, I talk with bankers, economists, academics, and more about the complex dynamics shaping the financial services landscape. This week on Bank Nerd Corner, I'm joined by BJ Sanford and Matthew Lambert to discuss the 2019 case Vullo versus OCC. BJ is a partner at Sivon, Natter Wechsler, and Matthew is the Deputy General Counsel at the Conference of State Bank Supervisors. I can't think of two better people to bring in for a discussion about the central question and important issues in this case, where it falls in the history of bank law and regulation, the unresolved questions, and how it lives on today. Banks worldwide use Tactile's AI decision platform to power their credit, fraud, and compliance workflows, and adapt them in weeks, not months. Built for banking, Tactile's platform is transparent, audit-ready, and made to test and optimize decisions continuously. Learn more at tactile.com. BJ, Matt, thanks so much for joining me today.
Hi, Kiah. Great to be here.
Good to be here, Kiah.
Well, I am so excited to have what I hope is going to be a lively conversation / mild debate about, I think, a really important legal question or case that the industry, saw and is still, kind of dealing with some of the impacts or fallout from. And I can't think of two better people to have me on. The case we're talking about today is Vullo versus OCC, and it was decided in the Southern District of New York in 2019. And I was hoping you guys could tell me a little bit about some of the questions of the case, and then the decision and the impact of it today. BJ, I'll start with you. What happened to lead to this case being filed? Like, take me back 2019 and even before. What's going on?
Yeah, and even though it's called the Bank Nerd Podcast, I'll keep the story to the 21st century. I'm sure we'll get farther back later on.
Come on, BJ, we can do it.
Well, to be fair, it's where the court started the story. So in the U.S., we have what's called the dual banking system, in which some banks are chartered by and mostly exclusively regulated by federal regulators, and then some banks are chartered by the states and supervised by the states and federal regulators. The states also license and charter a bunch of non-bank financial institutions, including the types of fintechs that really are at issue in this case. Now, back in 2003. The OCC the OCC regulates national banks, like the Office of the Comptroller of the Currency. They proposed a rule that made a bunch of changes to their corporate and licensing regulations. And one of the really more minor aspects of the proposal, not the biggest hot buttons, but one aspect of the proposal was an amendment in which they said, well, we charter these special types of national banks that are called special purpose national banks that are restricted in their activities. And so far, they had really just chartered them with a restriction that they can only engage in the activities that a trust company can engage in. But they wanted to issue a rule to clarify that we can charter these special purpose national banks not only to be engaged in these trust company activities, but any kind of activity that's within, quote, the business of banking, right? Which is a term, it's not really defined in the law. There's some hints about what it means in the law. And so the OCC got a bunch of comments, probably from CSBS, I imagine, among others. And so when they came to issue the final rule, they said, well, so we proposed this rule. We said these special purpose national banks can engage in any kind of activity that's part of the business of banking. Some people are saying that is too broad and would let us charter things that can drift too far from what the National Bank Act is about. So we're gonna limit it and say for us to charter a special purpose national bank, it has to engage in at least one of sort of three what they call core banking activities. One of them is taking deposits. The other is paying checks, basically withdrawing money in different ways, and then finally making loans. Right? And there it kind of sat for a while. Then, sort of in the 2010s, in the wake of the financial crisis, a couple of things happened at the same time. One, we had the rise of fintech, right? And so all of these fintechs who were technology companies who were engaged in different kinds of both lending and payments, but weren't banks, were trying to find a way to operate within our very, very complicated financial regulatory system in the U.S. And at the same time, also in the wake of the crisis, the FDIC really, really narrowed what kinds of banks it would approve to be insured depository institutions. And as a result, most fintechs, almost no fintechs, could get an insured bank charter that would let them operate, that would give them a bunch of powers to operate nationally. And so they sort of were looking for solutions for this. And then just around towards the end of the Obama administration, in 2016, the comptroller at the time, a Barack Obama appointee, proposed an initiative to respond to this, which was most people talk about it as the OCC FinTech Charter, where he said, we're going to charter national banks that don't necessarily have to take deposits. We're going to give fintech companies these limited purpose charters, or no, we're thinking about giving fintechs these.
I'm guessing that's important later on.
Yeah.
That they were thinking about doing this.
And there was a white paper. There was a bunch of comments, and I think it's important to note that this was during the Obama administration by a comptroller who was definitely not conservative. Just to highlight, a lot of times now people talk about it as a partisan issue, but it's really not really about partisanship. I think later we'll see it's a lot of it is about the institutional behavior of the OCC and sort of the states over a very long period of time. Well, anyway, they issued, the OCC, got a bunch of comments. Nothing really happened during the Obama administration. But then when the Trump comptroller, took office, he said, okay, we're going to go ahead and accept applications for fintech charters. There's a bunch of interest as the OCC did some outreach to try to get some interest, and they did get some applicants. And the state of New York, as well as the Conference of State Bank Supervisors, sued, saying, no, the OCC can't do this. This would, expand too much the sort of federal preemption of state law that the national bank gives, and they said it was really intended really for depository institutions.
Wait, so Matt, do you have any notes on what BJ just said as far as the groundwork of this case? And can you tell me, who is Vullo, and the parties involved?
Sure. So Maria Vullo was the superintendent of the New York Department of Financial Services. I don't know. I don't remember the exact dates, but so she would have been the plaintiff in Vullo v. OCC. And she had the same set of arguments that CSBS had when we challenged the FinTech Charter. We challenged 3 times, to BJ's point about being ready to accept applications versus we're not sure if we're ready to accept applications versus we're accepting applications now. But that's a different issue. I think the notes I'll add on the lead up to kind of the causes of this, because we'll get into the case history in the actual decision itself, but not only, institutional prerogative, but also understandings of federalism. What is the appropriate role of the federal government, and when do unelected officials exceed their authority? And what are the tools in play to make sure that is reined in? And frankly, I think it also gets to doing the hard work. We see with the Genius Act, folks did the hard work. I mean, that was a slog in the House and the Senate, and it took years to do. So when policymakers get in a room, sometimes it takes a long time, but figure out what the right framework is for applying law to finance and technology, or financial services and technology, then we get a certain outcome. And the fact that we're having this conversation means that we don't have a certain outcome right now. And I think that'll be my call to action. Let's figure out what the right answer is as we talk through this, or figure out a process for finding the right answer.
Well, both of you have mentioned, according to my notes, institutionalism over politics and federalism. And these are very weighty issues. In the case of Vullo versus OCC, BJ, what would you say the central question of this case before the court was? So
deciding what the question is halfway to deciding what the answer is.
Law is such a crazy discipline that that's where we have to start, is what is the question we should be answering.
So I'll tell you what the court said it was answering, and then the slightly different thing it answered, and it actually really matters now to what happens in the future. So the court basically said the question is, can the OCC charter national banks that don't take deposits, right? And that don't fall into the special category of trust banks, which I'm sure we'll talk about. What they actually decided is, I would phrase it as, does the law unambiguously prohibit the OCC from chartering these non-trust national banks that don't take deposits? And I think that matters because, just as a spoiler, I think under the law at the time, that was, I think both the reasoning and the outcome of that answer to that question was wrong.
Okay.
Right?
Okay, gauntlet thrown. I get it.
The reasoning is still wrong, I think, but the outcome, it's actually a closer question.
Okay. Matt, you mentioned that CSBS tried 3 times to sue, and it sounds like that didn't. The name of the case is not CSBS versus OCC. So can you talk a little bit about the interest, the CSBS's interest in this case, and then what you would have, what your side or what you would had argued the central question was?
Well, I'll start. The central question was whether or not the OCC can give a national bank charter to an entity that is not a bank. The secondary question is, what is a bank? And what are the activities that are engaged in it? But for the states, when I was in the room when Comptroller Curry announced the FinTech charter, and if I'm honest, I was shocked, because I knew that as the former commissioner of banks in Massachusetts, that he knew where the authorities should be between state and federal government. And for us, for state regulators, for CSBS, this does come down to a fundamental question about supporting innovation. A lot of folks think that centralizing a regulatory regime improves regulation. And I think we need to talk that through further, because there is certainly a case for national and global supervision and a view into large companies. But companies that start in a garage don't go from the garage to North America to the entire world in a heartbeat. So what is the right way to think about allowing companies to try new things and fail without harming consumers? We have a regime for that, and it's worked pretty darn well, and we've made it a lot better in the 8 years since we originally challenged the OCC. So we took a two-step approach. One, we wanted to make sure that there was an appropriate balance between the state and federal role. But two, we wanted to make sure that the states were doing a better job. We called this Vision 2020, came up with a lot of initiatives, including One Company, One Exam initiatives for better supervision, the multi-state MSB licensing agreement, so on and so forth, to make sure there are tools to make sure that you can lend and make payments at the state level in a way that where interstate barriers are not unnecessary friction.
And what happened that you guys weren't able to sue them?
Well, we were. So this is BJ was hinting at this before. So our first challenge was dismissed as not ripe because the OCC said that they hadn't made the decision yet.
Okay.
Then they updated their licensing manual and said that they were going to take applications.
Okay.
So we go, okay, well, let's challenge again. All right. That was dismissed too, saying that it's not ripe. Then they got an application, so we challenged then. We dropped that suit after the applicant went on to seek deposit insurance.
Okay.
Because it's a central premise to us that banks take deposits.
Sure.
National banks need to have insured deposits to be a bank. So we dropped that case. So CSBS v. OCC was never decided, twice because of ripeness, the third time because the facts of the case changed.
So it sounds like at a certain point, New York decides to bring a case, and this is the one that I guess actually gets more adjudicated, more answered, even if we don't always think it was fully settled or don't agree with the decision. BJ, in the OCC versus Vullo, what was the OCC's argument that it was making?
Yeah, so the OCC is saying, look, the business of banking isn't really defined in the National Bank Act. There is a law. There is a list of things that are included in the business of banking in some part of the National Bank Act that includes things besides taking deposits. Including making loans, including some things that banks today don't really do, which I think sort of comes into play in terms of looking at this decision, and so that was its initial approach, right? It was to go with this. Well, the business of banking is this expansive thing, but it's not a closed list, right? And then when it narrowed its position and said, well, let's narrow it to these core banking activities. It's looking for, where to put that sort of minimum boundary as to what's the minimum amount of banking to count as banking. It looked actually to another part of the law that's about branches, right? And what counts as a branch. Obviously, a branch is a place where you do banking, and to count as a branch, the bank has to do one of the three things: take deposits, pay checks, or make loans. And so the OCC says, look, we know this is about branching, right? But it's a sort of like a definition in the statute of what is like the minimum amount of activity that could be counted as banking. So we'll use that as our boundary.
Yeah.
But perhaps kind of either way they go, they said the National Bank Act is not clear. It's ambiguous about what the business of banking is. And under the law at the time, if the statute is ambiguous, then the OCC would get deference from the court sort of for their interpretation.
And Matt, I know that the CSBS, you talked a little about the arguments you were making, but could you share what Vullo and the New York DFS argued?
Sure. So it's not lost on me that this is the Bank Nerd podcast, and do you listen to 99% Invisible at all with Roman Mars?
Of course I do.
So he said to his beautiful nerds that they had a problem with being painfully chronological. And I hate to say it, but I'm going to be painfully chronological here.
You can't get away from it in banking.
I think you have to understand what's happening here. So 1977, last century, that's good for me. I'm not going back to 1787. National State Bank v. National State Bank of Elizabeth v. Smith. That's it's a limited purpose trust charter granted to a bank. The New Jersey District Court says the OCC does not have authority to do that. Congress then adds that authority to the National Bank Act, which is why in 1979, the Third Circuit basically rubber stamps the statute changing. That's important because it's cited in Interpretive Letter 1176 by then Chief Counsel Gould. We'll come back to that later. Then there is a wave of non-bank banks that are seeking charters from the OCC from 1980, 1984, and they to Comptroller Conover's credit, he did a moratorium on taking applications for these non-bank banks, and that's what they were called. I wasn't around at the time, but that's when you read it. They called them that, and he wanted to go to Congress, talk to policymakers, figure out the right approach to this issue, and I give him credit for that, and frankly, I think that's probably something we should be doing now in terms of how we regulate this technology and the issues BJ was raising earlier. But those moratoriums lapse, and he grants a whole bunch of non-bank bank charters. IIBA challenges in the court case IIBA v. Conover. And the district court in that case invalidates those non-bank bank charters, saying the OCC does not have the authority to do this. It's because a bank must accept deposits and make commercial loans. I say all that because it was then codified in 1987. So we had the
I see what you're doing here.
National State Bank of Elizabeth. OCC loses. National Bank advocates go to Congress. They change the law. Okay, now we have trust charters. 1985, OCC loses. The law doesn't change. In fact, it codifies the IIBA v. Conover by defining a bank as taking deposits and making commercial loans. And that's in the Competitive Equality Banking Act. So this is all to say that, one, this issue is not new. So in 2003, when you find authority that you hadn't previously talked about, except you kind of had because you lost a court case and then the legislative process. But two, for an issue that is based on language that was written in, what, BJ, 1863? I get confused between the National Currency Act and the National Bank Act. And
both of you are losing points because you mentioned something from the 1800s.
Oh, no. Sorry. But the point is, I think that this gets back to Vullo. Mm-hmm. The Vullo court quoted the Supreme Court, and I think this is a big issue that we need to deal with. When an agency claims to discover in a long extant statute an unheralded power to regulate a significant portion of the American economy, courts typically greet its announcement with a measure of skepticism. So there's not going to be deference to the OCC's position on anything now after Chevron deference has been removed from our jurisprudence. And there's going to be an inherent skepticism to begin with this kind of interpretive approach to something that, one, has kind of already been litigated. Well, it's been litigated, and it's been recognized by Congress that litigation stands. And two, to if we're reinventing it, we're reinventing something that is definitely a major question that we expect Congress should undertake and policymakers should debate instead of having back and forths like CSBS and OCC have for too long, frankly. And I think it's time for us to work together.
BJ, go ahead. What would you respond to that argument?
I'll add some notes as you put it, Kiah. Although, first, let me agree with Matt completely that this problem is ultimately rooted in the failure of policymakers to sort of come together and decide what are we going to allow and what are we not going to allow. And specifically, I don't want to, not just policymakers, but legislative policymakers. Right? And here, so let me sort of point the finger at Congress. Right? One of the big problems is that the law is really a mess, right? And there's a bunch of sort of patchwork provisions with language that isn't really that straightforward. One of those is this provision clarifying, might say, or the OCC would say, clarifying that the OCC has the authority to charter, national banks that are limited to trust activities. And actually, because the language, when you look at the language, which often doesn't get really quoted in full. A lot of times, people aren't really quoting what the law actually says. As soon as you look at it, it basically says sort of tacked on at the end of this, section about the OCC being able to sort of charter national banks, and it says, then OCC a chart. I won't read it in full, but essentially, a national bank should not be considered illegally constituted just because the OCC limited its activities to the activities of trust companies. Right? So that, to me, the most straightforward reading of that isn't, now we're granting this authority to the OCC, right? It's more, this is a fix for a litigation outcome that we disagreed with, right? We, Congress, right? And we want to clarify that no, it's okay. I think another important thing to point out about these trust activities that provision, allowed, charter for, is that they're not in the list of business of banking, in that section where I said, so, which was really important for the national state case, right? With the court there, really the question was, look, these trust banks that the OCC is chartering aren't doing any of the things that are in the list of the business of banking, right? So how is that allowed, right? So I think it is a little bit different, right, than when you're looking at, whether they're doing some of the things in the list and not other things, and there are a bunch of things in the list that almost no banks do now.
Well, and it's funny because as I'm listening to you guys, kind of rehash this and trying to draw the parallels between the arguments that were made back in 2018 and 2019 and today, I'm also kind of reminded that sometimes being an editor really sucks. And at least, my experience with someone who writes is that I have to pick a dictionary and I have to pick AP style. And then the amount of conversations you would get involved with someone about grammar or should a comma be there or, and it they both kind of matter because they can change the definition or the meaning of full sentences. They can make something accurate or inaccurate. But then also there is, and I'm sorry, I hope I don't hurt either of your feelings, but there's a tedium sometimes to talking about words and the meaning of words and what was intended. And certainly not just this case, but there are other cases where everything just needs to be so much more explicit and everything needs to be so much more specified and everything needs to come to Congress and there's just maybe less room for interpretation and that we've, someone decided that's how we're going to move forward.
Well,
And there are some real consequences, including, right, some of this more tea leaves. So
it's funny you should mention definitions because, also this, the 1987 clarification, right? What we call regular is called CEBA, right? Competitive Equality in Banking Act. And the whole definition of bank there, that's a definition of bank under a different law.
Yeah.
Right.
And I'm also fascinated by what is a bank, and it was that answer can only be answered in maybe the present or the future, but can't be answered in the past, but it can't really be answered in the future, right? Sorry, Matt, you keep looking like you're going to say something.
No, you're right. It's interesting too because a lot of that discussion in the 70s and 80s was to figure out how to provide financial services but avoid the Bank Holding Company Act, which is why
we're always working towards avoiding the Bank Holding Company Act.
And that I have advocated that we need to do a primer on the Bank Holding Company Act just to remind folks of the perils of joining banking and commerce. But actually, that would stay in last century, Kiah. That wouldn't violate your rules. But that's why we came up, or that's why the OCC was approving non-bank banks, right? That's what the business model was. But to your point about how tedious words can be, non-bank bank doesn't pass the Matt's mom test. If I say to my mom, "This is a non-bank bank," she goes, "What?" My mom's from North Jersey via Brooklyn. That is just not going to fly. And I think when you look at Vullo, Southern District of New York, right? They go back to that 1978 case, that 1982 case. 1982 permission for the OCC to charter bankers' banks. So we have enumerated powers for trust and fiduciary activities, which are then regulated by 92A, and for bankers' banks, and not for a fintech bank, not for a non-bank bank. And a non-bank bank, which is a fintech bank chartered by another name, just doesn't pass that common sense test. So we should be talking about how could it, how should it, how can we protect banking and commerce? How can we make sure that my mom isn't in danger of losing all of her money because it's not insured by the FDIC? Instead, we're here talking about definitions from 1987 and 1977, and instead of doing the hard work.
Yeah, right. I mean, as well as the question, which I think was central to a lot of the applicants and potential applicants under this fintech charter, is should we have interest rate limits? Right? Should interest rate limits
for lending or not deposits, right?
For lending, right? Yeah. Again, this goes back again to this mess that we have in the law, right? Where state bank. This was really central to this whole fintech charter, right? Just state banks can, who are insured by the FDIC, right, can what's called export interest rates. So they can charge the rates that they're allowed to charge in the place where they're located, to regardless of where the borrower is. And that's what enables things like credit cards, for example. But if you're going to do that as a state bank, you have to be FDIC insured, just because of the history. What the OCC, what was really happening here, getting out of the definitions, right? What was really happening here at the time, right, was that this was mainly a solution for lenders, right, who are looking to take advantage of the Supreme Court's interpretation that under federal law, national banks can what's called export interest rates, right? And so, the real question is here: should there be limits on interest rates? That's the question, right?
I love that. I'm trying to talk about one case, and you guys keep bringing up other cases, and I'm just like, and I get that that's like the whole of law is just like more cases on top of cases, and bringing the questions forward.
I think BJ is raising usury limits that come from the Bible, and he should be exqualified from his position because, that's before 1787. That's 2,000 years ago, BJ, and the states take very different approaches
BJ,
to that.
You said you didn't. Yes, I take your point. I definitely knew he was talking about something else. In banking, conditions change fast. Credit teams need to adapt without sacrificing credit quality, compliance, or control. That's why banks choose Tactile's AI decision platform. It gives teams the power to design, test, and refine credit, fraud, and compliance workflows using AI quickly and securely. With seamless data integrations and built-in testing, every decision flow can be optimized in real time. With Tactile, AI isn't a black box. It's transparent, explainable, and regulator-ready, so banks are always prepared for what's next. For more information, visit tactile.com. But BJ, you said you disagree with this decision, and we haven't even talked about the decision. We've kind of hinted at it. What was the decision in this case?
Yeah. So there's really two parts of the decision. Right? There's a procedural part, which basically says, yes, New York can sue. Right? It's not really banking specific, right? It's only important in that that's the part of the decision that was reversed later. So that this case really actually was reversed and vacated and then ultimately dismissed when it's settled. The more important decision is that the court said, yeah, deposit taking is required. It's unambiguous, right? That the law, requires that, for the OCC to charter a national bank, if it's not one of these trust banks, right, they have to take deposits. And the court really kind of rested on a couple of things, none of which are very unambiguous, I think. One, they said, look, the National Bank Act has all these references to, the fact that national banks take deposits. Right? But the funny thing is, the provisions that it quoted, about the fact that national banks take deposits, we're also talking about national banks doing other things that most banks don't do now. Right? So, I think it's certainly not unambiguous. But then I think that then it went into this history, part of which Matt recited, right, where it said, in fact, Congress, never before has the OCC gone ahead and chartered these non-depositories. Every time the OCC wanted to charter a new kind of bank, Congress first passed a law saying it could, right, and then the OCC went ahead and chartered. And that's just untrue, as Matt pointed out, right? The OCC chartered 5 trust banks before the 5th one was invalidated by national state, and Congress then changed the law. And and again, the court, of course, didn't quote what the actual provision was that the Congress put in, but when Congress, passed that law, the language was, in fact, the language itself was on its face retroactive. Like, it explicitly said these trust banks, any of these trust banks that the OCC previously
if they already exist,
or will charter in the future, they're fine, right?
Yeah.
And then it brings up this example of bankers' banks, which is, we won't get into even more of
cut it off. We have to cut it off.
It's in the case, though, Kiah.
But bankers' banks take deposits, too, though. I don't know why it's even relevant here.
Matt, my question for you. Congrats. Your side won. Do we feel good about this? Did it going forward, did it feel like we have enough precedent to help us answer the major questions of our day-to-day?
Well, let me go back just a second, because it was dismissed because of the procedural part that BJ raised before, and I think that's a problem. And I think it's a problem. It's not a legal problem. I get it. It's harder and harder to establish standing based on the actions of an agency. You need harm first.
Could a bank sue, but not the regulator sue? Like, who would be the party?
Not until they can demonstrate actual harm, and actual harm is getting harder and harder to prove. Why this is a problem is actually represented by us being here, right? So right now we see the comptroller, he's got a lot of trust charters before him, and I don't know the details of all the business plans of these trust charters, but I bet some of them are relying on his interpretive letter 1176 that is just legally inaccurate. And I can't challenge that now, and neither can all the banking trades that have sent their letters saying that this is illegal. Somebody has to go through the cost of getting that charter, only to then be sued by someone, whoever it may be. So this is the process that we are going through, means that hopefully innovative actors or innovative people that are trying. Do you imagine trying to get regulated this hard? Trying to find the rules of the road are still not able to. Vullo makes clear what the legal standard probably is going to be in the Southern District of New York. But again, it's still not the law of the land because of this procedural problem that we've had. And I think we're just repeating that now with 1176 and the trust charters. And I raise 1176 because it cites that trust case and subsequent law as evidence that a trust company can engage in the business of banking. And it's just not legally true. And so because of this procedural problem, we're going to end back up here again in 5 more years, Kiah, and maybe there will be a trust that is engaged in the business of banking. Maybe it'll be very clear what their fiduciary activities are. In fact, that's what I would love to do. Let's sit down and figure out what the right fiduciary activities are for this business model versus this one.
Yeah.
Let's get into the details and make clear rules of the road instead of throwing spaghetti against the wall and seeing what sticks.
That's another example of where Congress sort of left a mess here, right? Even though it acted on stablecoins. Right? Mm-hmm. You have the Genius Act. In the Genius Act, Congress refers to there being stablecoin issuers that are uninsured national banks, right? But it didn't say anything to clarify.
Did anyone tell
the
Congress
law on uninsured national banks? It just referred to these exist. But what? It's just sort of really had the opportunity to do something and just left us where we are.
I have heard someone argue to me when I was in D.C. last week that the Genius Act does establish a new charter, likely under that. But that's going back to Matt's point about Congress. Like, that doesn't also seem enough. That doesn't seem like enough to support a new charter, right? That's not how we want probably new charters to be articulated either, as asides.
Although arguably issuing money is actually, it is listed in the business of banking in the National Bank Act. So maybe that's what they were looking at.
So I think it's really...
currency that the comptroller is comptrolling?
Yeah, exactly.
Can we talk a little bit about some of the upstream or downstream impacts of this case? So certainly I think one of the things is the parallels to stablecoin and Genius, and we can talk about that more explicitly. But, also we don't have a fintech charter, and I can't not think about the relationships between some of the things we've seen with banking as a service and whether, like, what happened a couple of years ago with banking as a service would have been different if there was a non-depository financial service charter that was issued nationally and regulated. And that's I think where my interest, even prior to stablecoins, came from in this case. So that's my example, I guess. So Matt, do you see And I know, federal preemption seems like, this case really tried to answer it. And I know there's been some federal preemption cases that have come up since. Do you see other downstream or upstream impacts from this case that this case maybe contributes to or complicates or shows up again?
Yeah, for me, BJ touched on it pretty early. The lack of de novo banking charters and the approval of deposit insurance is something that is not sustainable. Historically, right? Some banks fail, new banks are born. Some banks get out of a business, new banks come in. There's a supply and demand of financial services, and that supply of financial services is going away on the banking side. At our current consolidation rate, we lose a bank charter about every 3 days. So what? What does that mean? It means that credit availability around the country is going to be impacted. We have 50 state economies. Within each state, there are, you can pick an economy as you want. Silicon Valley is its own economy, right? And Silicon Valley for AI is its own economy. Biotech, you name it, right? There's different credit needs, and the large banks aren't going to be able to serve all of them, and rightfully so, right? They're driven by policies, procedures, and controls for their credit policy, so on and so forth, and that's important. That's really important for credit availability at scale. But if you want to have a small business and a loan that is on your terms or near your terms, you need banks and small banks. And part of that problem with no new ones is that nobody's stepping in to give these loans, except maybe some of the folks that are seeking banking as a service through and bank partnerships, and are filling a gap that's pretty ambiguous right now. So I'd like to see more banks, and I'd like to see clearer guardrails for the folks that provide services to these banks and the vendor management policies that these banks would be using.
BJ, what do you see as an upstream or downstream impact from this case?
Well, I mean, I think the number one downstream impact is that what people remember from the case is that the OCC lost.
That's my takeaway from the case. I can't believe there's so many standing questions, and the standing thing is its own separate conversation.
But so I think one thing that, if I would say anything here, is it's not a settled issue, right? Whether the OCC can even do this, or can even do the fintech, charter as it proposed. I mean, let alone these sort of say expanded trust charters, right? That some of these crypto companies are applying for. But I also agree with Matt, fundamentally on the issue of the bank charters. I know I worked with fintechs for my whole career. I was working with them during this fintech charter time, during the BAS time, and most of these fintechs I work with, they don't want the fintech charter. They don't want a, bank partnership, right? They want bank charters. They want bank charters, right? They're just dealing with the fact that they can't get them, right? And you can see some fintechs did go ahead, right? And, we're able to get bank charters through acquisition ultimately, right? And they're doing pretty well, right? And they're doing just as well as any other bank on average. And so much of the distortion that we have here is coming out of this rigidity, this sort of rigid sort of closing up of the doors to the charter, and not just the general conservatism about granting charters, but the point of view that was really at the FDIC for a very long period, that we would love to have traditional community bank charter applications. Right? But we don't want to have a bank charter application that has an innovative business model, or even one that is premised on a community that's not geographically defined, right? Like even that we're seeing emerging organically in fintech even today, right? With the emergence of the vertical SaaS embedded finance, right? Which is, what is it but community banking, right? And actually, and having been inside of many panics and bank failures in my career, the Silicon Valley Bank failure, that was a community bank failure. That felt like a community bank, right? Because the community panicked, right?
Yes, because they had their depositors kind of constituted a community.
It was like the scene in The Meaning of Life.
You're not saying it's a community bank.
In It's a Wonderful Life,
whatever,
right?
You're saying
where everybody comes,
yeah.
right?
Yeah.
But
I think you're making, I think it's interesting when we think about, one, obviously to recognize that these cases, they take place in a moment of time and they're built on the precedent and the banking law that came before it. And then they speak to the future afterwards. And BJ, I think your point about, what I guess I could read was that a lot of this was in response to like some type of arbitrage or some type of workaround. And that, the question is also like, would we want some of these non-bank financial technology companies to be able to acquire bank charters? And that if the question could be yes, maybe we don't have this case at all. But if the question's no, then maybe we still have this case, and then maybe we still have these other tack-on questions, because that's the real question, right, of this case. And we're actually kind of still are discussing that today. Like, even if, maybe if Congress was like, we want these companies to be able to apply for bank charters, and you can't be opposed to them from like an ideological or like a competitive standpoint. You have to assess these applications on their merit. But I don't always know if we're making that, if we're always like willing to be like, yeah, maybe, I'm trying to think like New Bank, right? Like, cause they just announced that they're going to acquire, like, maybe we should just like acquire, like assess it on the merits, right? Or should we have these conversations where, oh no, the OC, you can't legally do this, or you can't, just like, like, are we just asking the right question because we actually don't want to answer that question? So we're going to answer all these other questions. This goes back to what
Matt was saying at the beginning, which is, part of this is about what should the authority, right, of these regulatory policymakers be, right? Including the authority to decide, we don't want this kind of bank. That's allowed, right, under the law, right? We don't want to, bet a de novo, like the fate of a new bank on an unproven business model. This is like an almost explicit philosophy that prevailed for over a decade among the bank regulators. Or, something that we still see today, where we have this new phenomenon, this new business model that we don't really know how to regulate, right? And will probably lead to some failures as we figure it out. Is that a good enough reason to not do it?
Matt, what would you say? You've been so quiet.
I would say that what worries, I see what BJ is saying, and I'm not going to say I disagree with him, but what worries me is when the federal government gets to pick winners and losers. So if you don't get your federal charter, you're dead, right? And if the federal charter is reserved to 5 companies, 10, 100 companies that do this kind of work, then if you're on the outside looking in, we've not only limited economic opportunity, but we've probably limited innovation, because I don't think anybody ever looks to Washington as the innovation hub. Innovation occurs when financial services actually service the economy, and we can't regulate that. We can just allow it to come into the system on an equitable basis. And I don't think the OCC FinTech Charter does that. I've got my serious doubts about the some of the trust charters that are before the comptroller. And, it all comes down to, are we going to let industries innovate, or are we going to reward a couple companies and give them nationwide access to capital markets and consumers?
Yeah, I mean, let me give you a substantive data point here. So one of the things I've done for forever is these licensing options analysis projects back when I was a consultant, as a lawyer, helping financial institutions decide, okay, what kind of charter or license are we going to operate under? For most of the time that I've been working, when we're looking at bank charters, the answer for most of the clients is state.
State bank charters or state money transmitter licenses?
No, the state bank charters. We're looking at bank charters. Yeah.
Okay.
Sorry, I was
talking about banking activities.
Could be for money transmission too, right?
Banks,
Because of how Congress, the sort of the parity laws that Congress has passed in the insured depository institution space, right? There's really not a huge difference between the powers of insured state banks and the powers of national banks, right? And then there's some sort of meaningful advantages, right, to the state bank charter. So it really depends on your product, depends on your business model, a bunch of different things. But more often than not, actually the answer was, during very large stretches of this period, state charter. And in fact, most new banks are state banks.
Well, something I want to leave our listeners with is, the why this, why now. And I think the clearest, the clearest reason why they need to be familiar with some of the arguments in this case, and maybe its settled and unsettled nature, is that, I don't know, are we in round 2 of this fight, Matt, for Crypto National Trust? Like, do you see, essentially copy paste or control F changing some of the names here? Or do you see how do you see these, the national, the applications for national trust charters by crypto companies being different than some of the questions that were raised in 2019?
I think we're at a critical time where we can start to have those policy discussions and sit down in a room or on a Zoom and figure out what the right boundaries are and where. And, a lot of state charter banks have national trust company subsidiaries for some of the benefits that comes with. That could be the same for, we're not going to brand what you just said, Kiah, but that you can see that being the same for any number of different approaches in either direction too. So I think we're at a critical point to avoid the procedural pitfalls that we saw in CSBS v. OCC, Vullo v. OCC, because otherwise we're just going to continue doing it, right? We started in 1977.
Yeah, are we having so much fun? This is every
it's getting
decade
old.
we gotta have this fight.
Can we just figure out the right boundaries of the regulatory system? And by the way, I think it comes back to industry too.
Okay.
So I did a lot of work in the money transmission space, and when companies figure out their business plan, it is much easier to figure out the right lane for a money transmission license, or not. Maybe you don't need a money transmission license. So you can always tell when an applicant comes in that has a good law firm or consulting firm behind them that it's very clear what they want to do. And okay, that fits here. Here's how your capital, liquidity, receipts, consumer protection, segregated assets, whatever. Here's how that's going to work for you. And then we have clarity. So if the industry comes forward with clear business cases, what they want to do and how they want to do it, there's probably an answer. And it's up to regulators to also have a clear answer on their end if there is a concise business case brought before them.
And BJ, what would you say about are we doomed to continually debate the central questions of this case?
Well, in order to avoid that fate, we would have to bet on Congress doing something. And betting on Congress doing something is usually a losing proposition these days. So I
would be interested to kind of see in a year what comes out, especially with that a little aside about a charter in the Genius Act. But for today, thank you guys so much for talking about this with me, getting into the history, not getting too far into the history, a little into the grammar, not too far into the grammar definitions. And I really appreciate it.
Thanks, Kiah.
Thank you.
Thank you for listening to this episode of Bank Nerd Corner. Stay up to date with news and trends in the bank space by subscribing wherever you get your podcasts. Also, if you love FinTech Takes Banking, please tell a friend. Talk to you next time.